Okay, let's jump right in. Welcome to the deep dive. We're here to really unpack the source material you share, giving you the core insights.
That's the plan.
Today, we are doing a deep dive into Snowflake's Q1 fiscal year 2026 earnings call. Think of this as your fast track to understanding their results and their outlook.
Exactly. We've sifted through the call, pulled out the key numbers, the strategy points, what management's emphasizing, trying to give you that clear picture.
Great. So let's start with the basics. The result snapshot for Q1. What were the headline numbers?
Okay, so product revenue landed at $997 million. Now, the reported growth year over year was 26%. But, and this is important, they pointed out that if you adjust for the extra day last year, the leap year effect,
Right.
growth was actually 28%. So the takeaway there is that growth didn't really decelerate from the previous quarter. Stable growth, basically.
Okay, that's a key distinction, that leap year adjustment showing stability. What about some of the forward-looking metrics like RPO?
Right, remaining performance obligations, or RPO, that's the future revenue locked in from contracts. It hit $6.7 billion.
Wow. Okay.
Yeah, and that's up 34% year over year, so pretty strong growth there. And net revenue retention, NRR, that was 124%.
124%. So still expanding nicely within their existing customer base.
Exactly. It shows they're keeping customers, and those customers are spending more over time.
So overall, how did the company sound? What was the vibe?
They called it a strong start to the year. And based on that start and what they see coming, they actually bumped up their growth expectations for the full year. So definitely conveying confidence.
Okay, good overview. Let's dig a bit deeper now beyond the top line.
Yeah.
How did the financials look in terms of, say, efficiency and margins?
Yeah, this was an interesting area, looking at their non-GAAP numbers, the adjusted figures.
Right, taking out stock comp and things like that.
Exactly. So non-GAAP product gross margin was solid at 75.7%. But the really notable one was the non-GAAP operating margin. It came in at 9% for Q1.
9%. That feels like a pretty significant improvement.
It is. It's up 442 basis points compared to last year.
Okay, 442 basis points. So just over 4.4 percentage points higher year over year. That's substantial.
Definitely. And they were pretty clear about it. It comes from a real focus on driving efficiency across the whole company. Tightening the belt where they can, but still investing.
That classic balancing act. How did that efficiency translate into cash flow?
Well, the non-GAAP adjusted free cash flow margin was 20% in Q1.
Okay.
They did add a little context, though. Said Q1 free cash flow was sort of impacted by some customer purchasing patterns back in Q4. So they expect the full year's free cash flow to be more weighted towards the second half.
Got it. A bit of timing impact there. Were they putting cash to work? Any share buybacks?
Yes, they were active. Spent $491 million buying back 3.2 million shares. The average price was $152.63.
And they still have authorization left?
Plenty. About $1.5 billion still authorized through March 2027. And they finished the quarter with a strong cash position, $4.9 billion in cash and investments.
Okay. Financially sound, driving efficiency, returning some cash. Let's talk about customers. How did customer acquisition and bookings look?
Customer growth was pretty good. They added 451 net new customers. That's up 19% year over year. Management seemed pleased, saying it shows the groundwork laid by their dedicated acquisition team, which they started last year, is starting to pay off.
Makes sense.
Yeah.
And bookings, you mentioned strong RPO growth earlier. Was Q1 a big bookings quarter?
They described it as strong, yeah. And part of that strength came from two really large deals, over $100 million each.
Oh, wow.
These were deals they actually expected back in Q4, but they slipped and signed in Q1.
Any particular industry for those big ones?
Yeah, both were in financial services. That vertical continues to be really important for them.
Did they give any reasons why bookings were strong beyond just those delayed deals, maybe sales incentives?
They did mention a recent tweak to their sales comp plan, which now includes a bookings element, so that probably helped a bit.
Okay.
But they stressed, the main engine is still consumption revenue, what customers actually use. Bookings give visibility, but usage drives the business day to day.
Right. Consumption is king. And that consumption relies on customers using the product. So what about product momentum and innovation? Still moving fast.
Oh, yeah. If anything, they're accelerating. They launched over 125 new product capabilities just in Q1.
125 in one quarter.
Yep. And they highlighted that's a 100% increase compared to the number of features they released in Q1 last year. So doubling the pace of innovation output.
That's impressive. Are customers actually using these new things?
Seems like it. They specifically called out strong adoption and even better than expected performance for newer things like Snowpark.
That's their developer framework, right? For Python and Java.
Exactly. And dynamic tables, which help automate those data transformation pipelines, both seeing good traction.
Makes sense. Making it easier to build and manage data. What about getting data in? Connectivity.
Big focus there, too. They talked about advancements with Snowflake connectors using that data lower tech they acquired.
Right.
Making it easier to connect to things like Google Drive, Workday, Slack, SharePoint. They mentioned AstraZeneca, for example, pulling data from SAP and Workspace into Snowflake for analysis. That seamless integration is huge.
And are they embracing open standards? Things like Iceberg.
Absolutely. They highlighted increasing adoption of Apache Iceberg. The key is they're enabling Snowflake's feature sharing, security, performance to work directly with data in Iceberg format.
So more flexibility, less lock-in for customers.
That's the idea. Gives customers choice on how their data is stored underneath.
Any core platform improvements,
Yes.
like performance.
Yeah, they mentioned the Gen 2 compute environment. The goal there is pretty straightforward. Better price performance, more bang for your buck on compute spend.
And expanding beyond analytics. Any movement on transactional stuff.
Touched on that too. Continued investment in things like Unistore, which aims to handle both transactional and analytical workloads. They see it as a natural extension, letting customers consolidate even more onto Snowflake.
Okay, lots happening on the product front. Let's shift to the topic everyone's talking about, AI. How's that playing out on Snowflake?
It's definitely growing fast. They said over 5,200 accounts are now using AML capabilities weekly.
5,200. How does that compare?
That's up significantly from a year ago, so clearly usage is ramping up quite a bit.
What's their main pitch around AI? What's the strategy?
The core message is pretty simple. Snowflake makes your data AI ready. Their argument is that the hard part of AI isn't always the model. It's getting the data right, clean, accessible, governed.
So Snowflake is the foundation for AI.
That's exactly it. You build that solid data foundation on Snowflake, then you can do cool things with AI effectively.
How do they make money from it? Is Cortex AI like a separate add-on you buy?
No, and they were clear on this. Cortex AI capabilities are integrated into the existing consumption model. It's not a separate SAU.
Oh, okay.
The idea isn't to charge extra for the AI feature itself, but that using those features drives more compute usage on the platform, which is how they monetize. It's about the value it unlocks, which leads to more consumption.
Got it. Can you share some real-world examples they mentioned? How are customers actually using this AI stuff?
Yeah, they give quite a few. Things like companies building internal chatbots they mentioned. Kraft Heinz has one called H or Cracks AI.
Okay.
Analyzing unstructured data, like an auto company looking at customer reviews.
Yeah.
Enabling personalized marketing, but doing it privately using data clean rooms was an example there.
Privacy-preserving AI.
Right. Samsung Ads using it to unify data for new advertising features. Luminate data using Cortex agents, these sort of specialized AI tools to process structured and unstructured data at scale.
Cortex agents, okay.
Even internal productivity, like a sales knowledge assistant powered by Cortex. And using AI to help test data migration. So a pretty broad range of applications.
That's quite diverse. Are they building the big AI models themselves or partnering?
Mostly partnering and integrating. They explicitly said they're not trying to train those huge frontier LLMs themselves, too expensive.
Makes sense.
Their focus is more on post-training techniques, making models better for specific tasks, like improving Cortex Analyst for natural language queries and optimizing inference, making it cheaper and faster to run models.
And bringing in outside models.
Yeah, partnering with folks like Meta. They had Llama available day one, Anthropic, OpenAI. They also expanded their Microsoft partnership to host OpenAI models directly on Azure within Snowflake. It's all about offering choice.
So bring the models to the data, provide flexibility. Okay. How are they getting all this out to customers? Any changes in their go-to-market?
Yeah, they talked about renewed focus and rigor there, especially under the new Chief Revenue Officer, Mike Gannon, growing the team, but also better alignment between sales, product, and engineering.
Is the sales approach itself evolving?
It seems so. They mentioned specialist teams for trickier areas like AI and data engineering, plus leaning heavily on partnerships with the big system integrators, the GSIs, for implementation help, and of course, enabling the main sales force.
And are they pushing into totally new markets?
Yes, a big one was launching Snowflake Public Sector Inc. And alongside that, getting the Department of Defense, the DOD, Impact Level 4 provisional authorization.
IL4, what does that actually unlock for them?
It's significant. It means they can now handle controlled unclassified information and really go after mission-critical work within the U.S. national security community, DOD, intel agencies, their contractors. It's a massive market they couldn't really address before.
Wow, okay. That sounds like a major potential growth area. Anything else on market expansion?
They also mentioned introducing new solutions specifically for the automotive industry, part of a broader manufacturing focus. Mentioned customers like CarMax and Nissan.
Okay, expanding the addressable market seems key. Shifting focus a bit, what about the macro climate? Are customers getting nervous, cutting back spend?
Management said they're not really seeing the kind of big optimization waves they saw, say, post-COVID. And things like recent tariff news haven't had a noticeable impact so far.
So it feels different this time.
Maybe. They did point out their customer base is more mature now, more large enterprises versus just digital natives. But they also said optimization is just normal in the cloud. Customers are always looking to be efficient.
Right.
Interestingly, they said their sales team is actually incentivized to help customers spend efficiently. The idea is it builds long-term trust, prevents bigger cuts later.
Proactive efficiency. That's smart. What gives them the confidence to reiterate and even raise guidance slightly then?
It sounds like it's based on current consumption trends holding up, plus good visibility into new workloads coming online. They specifically mention seeing more use of their free SnowConvert tool.
The migration tool.
Exactly. Seeing customers actively migrating using that tool gives them confidence that future consumption from those workloads is coming.
Okay. And how do they view themselves fitting into the bigger tech world, especially with competitors like the cloud giants?
They acknowledge it's complex out there. Customers use lots of tools. Snowflake's angle is to be the platform that helps consolidate and simplify that complexity. Ease of use is key.
And the relationship with AWS, Azure, GCP.
Oh, Hermes.
Huh, maybe.
Yeah.
They talked about working effectively with them, especially highlighting collaboration with Azure, things like reading data from Microsoft's OneLake, putting Cortex bits into Office Copilot.
Interesting.
So yeah, competition is obviously there, but collaboration seems to be increasing, particularly with Microsoft. Snowflake sees itself as the best data platform, kind of neutral, sitting within those larger ecosystems, playing nicely in the sandbox, basically. Any other smaller points from the call worth mentioning?
Just one quick one on spending. CapEx was up in Q1.
Oh, investing heavily.
Not quite like that. They clarified it was mainly due to building out new physical headquarters, San Mateo, Bellevue. Said it's not expected to be a long-term trend at that higher level.
Got it. Building the new offices. Okay, we've covered a lot. Let's zoom out. Why should you, our listener, care about all this? What's the relevance?
Well, I think this gives you a really good window into how Snowflake is executing. You see the product innovation, the sales focus, the moves into big new markets like public sector. It shows their growth strategy in action.
And you also see that focus on balancing the growth investment with operational efficiency. That improvement in margins and cash flow isn't accidental, it's a deliberate effort.
Absolutely. And critically, you're seeing how that AI buzz is actually translating into real usage on their platform. That's potentially a huge future driver for them, right? If customers use AI more, they consume more Snowflake.
Right. Plus, the raised guidance and the buybacks, those are signals from management about their own confidence based on what they're seeing right now.
Exactly. So understanding all this gives you clues not just about Snowflake, but maybe about the wider cloud data market and how quickly enterprises are really adopting AI in practice.
Okay, perfect time for our This Is Not Financial Advice segment. Purely for fun, stimulating some thought, an outrageous but plausible trade idea based on the call.
All right, inspired by that DOD news, I give you the federal snowball bet.
The federal snowball bet. Okay, I'm listening. What's the bet?
So you go long Snowflake stock. The outrageous part is you're betting that this DOD authorization immediately, like right now, triggers a massive, super fast ramp up in government revenue. The idea is federal agencies just ditch all their old systems and pile onto Snowflake way faster than anyone expects, blowing past all current growth forecasts.
Okay, that does sound pretty outrageous on the timing. What makes it even slightly plausible?
The plausible kernel is this. They do now have the key security clearance, IL4, to compete for serious mission-critical work in a gigantic market. And government loves efficiency and consolidating data sprawl, which are Snowflake's strengths. Management sounded genuinely optimistic.
Right.
So while the idea of an instant revenue explosion is the crazy part, the door to a huge, sticky, long-term market has just opened for them. That part's real.
Got it. A potential long-term opportunity, but the trade idea hypes the timing. Again, folks, just a thought exercise, not advice.
Definitely not advice.
So wrapping up this deep dive on Snowflake's Q1 call, what are the main things that stick out to you?
For me, it's the solid underlying results. That stable core growth once you adjust for the leap year. Strong RPO, good NRR. The product engine is clearly firing, innovation pace is up, and key new features are getting adopted.
Yeah, and strategically, they're making smart moves. That push into public sector is a big deal. Plus, the renewed focus on go-to-market execution seems important.
And don't forget the efficiency piece. They're clearly serious about improving margins and cash flow, even while investing. And of course, the AI adoption angle is fascinating to watch unfold.
Definitely. So this was our breakdown based on the earnings call content we reviewed, aiming to pull out the key insights for you. But remember, it's absolutely not financial advice.
And as you think about this, consider the ripple effects. How might Snowflake's success in AI or their government push influence others? What does it signal about broader trends? Sometimes those second-order questions are the most interesting.
Great point. Thanks, everyone, for tuning into this deep dive. Hope it was useful.